Hey everyone, ready to dive into some serious investing knowledge? We're breaking down a fascinating Turkish podcast, Metin Yapıştırıldı, had some amazing insights from this investment guru, Can. And we're going to bring you all the need-to-know stuff.
You know, it's funny because investing can seem so intimidating, right? Like, where do you even start?
It's true. But Salim, the host, and Can, they really get that. They emphasize how crucial it is to have clear financial goals, like what are you aiming for? Retirement, that dream house,
Yeah.
just growing your wealth.
Yeah, having that why is huge. And what I found really cool was how they connected that to this whole idea of risk versus return.
Oh, tell me more about that. How do they break it down?
Well, he actually used this really clever analogy about hiking trails. Some are like a relaxing stroll in the park, right?
Yeah.
Pleasant, but not super thrilling.
I gotcha.
But then you have those trails with breathtaking views. But to get there, it's steep climbs, maybe some wobbly bridges, you know, a bit more intense.
Okay, I'm already liking this analogy. So, wait, are you saying the chill park stroll, that's more like bonds, and then the intense mountain climb, that's like the stock market?
You nailed it. And just like with those trails, you got to figure out your own risk tolerance. How much are you willing to handle for the potential payoff? And that's where understanding different investment types is key. Can and Salim, they broke it down into four main categories. You've got stocks, bonds, real estate, and then the whole world of digital assets.
No, like Bitcoin and all that. So let's start with stocks. I'll be honest, that always felt kind of vague to me, this whole buying stocks thing. But he made it so clear.
Yeah, he has a knack for that.
He was basically saying it's like owning a tiny little piece of a company.
Exactly. And to really drive home the potential, he brought up companies like, imagine Apple, right? Or Amazon. Think if you'd invested way back when they were just starting out, the growth over time, that could have meant some serious profit.
Okay, so that's definitely the breathtaking view we were talking about. But what about those steep climbs Ken mentioned? There's got to be some risk involved with stocks, right?
Oh, absolutely. Can emphasize that while stocks have this huge potential for growth over the long term, in the short term, they can be really volatile. Remember those shaky bridges on our hike? Think of those as market swings, news events, all the stuff that can make stock prices jump around.
So it's about not freaking out and selling everything when things get bumpy, not making those impulsive decisions based on every little change in the market.
Precisely. Ken shared this fascinating stat, actually. Over the last decade, Turkish stocks, they've outperformed bonds by a significant margin, like an average of 8%. That's the potential reward for weathering the volatility.
Wow, that's a compelling argument for thinking long term. Okay, so we've got stocks, the exciting, potentially high reward hike. What about the walk in the park equivalent in investing? Tell me more about bonds.
All right, so bonds, think of it like lending money. You're lending it to a government or a company.
Okay.
They promise to pay you back on a set date. And in the meantime, they give you these regular interest payments, called it a fixed return, which makes bonds generally safer than stocks, especially for folks who really value stability and predictability.
So if someone's risk tolerance is more on the enjoying the scenery without the adrenaline rush side, bonds might be a good fit for a larger chunk of their portfolio.
Exactly. And even within bonds, you've got different levels of risk, too. Talked about how government bonds are generally considered safer than corporate bonds.
Makes sense.
Just like, a well-maintained path in a national park might feel a bit more secure than venturing off on your own in the wilderness.
This analogy is making so much sense now. So it's like investing is all about choosing your own adventure based on your comfort level and what you're hoping to achieve.
I like that.
You mentioned real estate earlier. That seems like a whole other terrain to explore.
It is.
Is that more like, I don't know, off-roading in the investing world?
That is a great way to put it. Especially in the Turkish context, real estate is huge. He's pointed out how it's seen as this very traditional, very reliable investment because, well, you're dealing with physical assets, right? Bricks and mortar. And, in Turkey, owning land, it's like, it just feels safe.
Right.
Especially with how quickly things are developing there.
Totally. My grandparents in Istanbul, they always used to say, invest in land, it will never betray you. But even with something like property, there's got to be some downsides, right? It can't all be, sunshine and roses.
Oh, for sure. And Can actually brought up a key one, this idea of liquidity.
Liquidity.
So unlike selling stocks or bonds, which you can do relatively quickly,
Right.
real estate takes time. You need to find a buyer, deal with paperwork. It's a whole thing.
Yeah, makes sense.
So while it can be a fantastic long-term investment, it might not be the best if you need quick access to your cash.
That's a really good point. It's like, how easy is it to turn your investment back into cash when you actually need it, right? Okay, so we've covered the scenic route that was stocks, the walk in the park, bonds, off-roading with real estate. What about the wild, wild west of the digital world? Crypto seems like, I don't even know.
It's a whole different beast, right?
It is.
And acknowledge that. How much it's grown, especially with younger investors. All these decentralized currencies, Bitcoin, Ethereum, they're intriguing because they operate outside of those traditional financial systems.
But I imagine with that freedom comes a whole lot of volatility, no?
You hit the nail on the head. Cam was very clear that while crypto has the potential for big rewards, it also comes with major risk. Remember those shaky bridges we talked about? It's like you're building those bridges as you walk on them.
Okay, yeah. That's both terrifying and kind of exciting.
Uh-huh.
So if someone's thinking of, I don't know, dipping their toes into the crypto waters, what's the best way to approach it?
Ken's advice, and I think this is crucial, only invest what you can afford to lose.
Okay.
Treat it like a small, high-risk, potentially high-reward part of your overall portfolio, not the foundation.
Don't put all your eggs in the digital basket. Got it. This is, wow, this whole conversation has been so eye-opening. We've covered so much ground.
Right.
But I feel like I'm finally starting to understand investing a little better. But how do you actually put all of this knowledge into action? Like, how do you build a winning investment strategy, a portfolio?
This is where Ken's really in his element. He is a huge believer in diversification.
Diversification, okay.
Spreading your investments across different asset classes. It's just like he said, don't put all your eggs in one basket, especially if you're not sure which basket is going to be the sturdiest.
I love that. And it makes perfect sense. If one investment takes a hit, the others can kind of help cushion the blow, right?
Exactly.
It's about managing that risk while still giving yourself a chance for growth.
You got it. Can emphasize that a well-diversified portfolio, it helps smooth out those inevitable ups and downs of the market. And this is where keeping a cool head comes in. He actually told this really interesting story about a time when he panicked and sold a bunch of stocks based on a rumor he heard.
Oh, no. It didn't turn out to be true.
It did not. And those stocks, they ended up doubling in value a couple of months later. He learned the hard way that letting emotions drive your investment decisions can really cost you.
Ouch, I'm glad I could learn that lesson through his experience, not my own.
Right.
So if we're trying to avoid those emotional roller coasters with investing, what's the key? How do you make those rational, informed decisions even when everything feels crazy?
Can really stress the importance of tuning out the noise. All those headlines, the market predictions that just make you anxious. Instead, focus on your long-term goals, stick to your strategy, and remember, slow and steady wins the race.
It's about staying the course, even when those shaky bridges start to feel a little, extra wobbly.
Exactly. And that actually brings us to the really practical advice Cam offered for anyone who's just starting their investing journey. His first tip, and I think it's so important, knowledge is your most valuable asset.
Okay.
The more you understand about different investment options, the risks, how to build that balanced portfolio, the better equipped you'll be to navigate the markets.
So step one, become an investing whiz. What comes after that?
You don't have to go all in right away. Can actually recommend starting small.
Start small, test the waters, gain some confidence.
Oh.
I like it. What was his final piece of advice for us newbies?
His last tip, it really stuck with me. He said, investing is a marathon, not a sprint.
Ooh, I like that.
Don't get caught up in those get-rich-quick schemes or expect to become a millionaire overnight. It's all about patience, consistency, letting your money grow steadily over time.
It's like, what is it? The best time to plant a tree was 20 years ago. The second best time is today.
Exactly.
You got to put in the work and give it time.
And remember that analogy used at the very beginning about choosing a hiking trail. He actually circled back to that. He said, reaching your financial goals, it's a lot like reaching the summit of a mountain. It takes time, it takes effort. You got to navigate some tricky terrain sometimes, but the view from the top, totally worth it.
I love that. This whole conversation has been honestly such a breath of fresh air.
Yeah.
We went from feeling intimidated by investing to feeling like, okay, maybe we can actually do this.
Yeah.
But, I'm sure there are some people listening right now thinking this is all great, but where do I even begin?
It's the big question, right?
It is.
Yeah.
So for someone who's listening and ready to take that first step, what would you say is the most important thing to focus on?
If I were starting my investing journey today with everything we've talked about, I think my first step would be to really look at my financial goals. What am I actually working towards? Is it buying a house in 5 years? Is it retiring early, leaving something for my kids? What is it?
Having that clear destination in mind, that why, it changes everything, doesn't it?
Yeah. It does, because once you have that clarity, then you can start researching, okay, what are my options? What's my risk tolerance? Maybe even talk to a financial advisor, get some personalized guidance. But it all starts with that self-reflection.
It's about taking control of your financial well-being, creating a plan that truly aligns with your values, your aspirations. That's powerful.
And you know what? Investing isn't just for the super rich or financial experts. It's for anyone and everyone who wants to build a more secure future for themselves.
Couldn't agree more. Well, on that inspiring note, I think we've reached the summit of today's deep dive into the world of investing. Remember, everyone, it's a journey, not a race. Every step you take, big or small, it's bringing you closer to those financial goals.
Happy investing, everyone.
And until next time, keep exploring, keep learning, and keep diving deep.